three-fund portfolio can be a great way to make investing simple and also give you the diversification in your investment portfolio you need to build wealth. In today's video, we're going to get into exactly what a three-fund ETF portfolio looks like at Vanguard and the allocation percentages to target for each of the three funds. Also, I'm going to share with you my strategy in replacing one of these funds for the opportunity to maximize potential earnings, especially if you're a young investor or someone who does not mind not having bonds. So the first ETF in this Vanguard three-fund ETF portfolio is none other than the US Total Market ETF. This would be VTI. Currently in September 2022, trading around $200 per share. Depending on when you see this, it could be a little bit more or less. VTI is a favorite of mine because it gives you exposure to just about every single US publicly traded company. This fund actually has a little over 4,000 stocks that it invests in with an average annual rate of return of about 8%. Let's say Mark invests $500 per month into this ETF. Now, Mark can expect to have about $680,000 in 30 years. If Mark can only invest $250, half of the original amount, he can expect to have $340,000 after 30 years. I really like VTI because you do get that great diversification in just that one fund across different sectors, across different industries. Also, the fees to own VTI are very little. As of September 2022, the expense ratio for this ETF is 0.03%. So if you invest $1,000 into this ETF, you would only be charged a 30-cent fee of that $1,000 invested in VTI. Now that's really impressive. And unless the brokerage firm or company you use to invest with charges you to buy this ETF or has any other fees, this is an ETF you can look forward to owning for a very long time for very little cost. It's actually the only ETF that I'm currently buying in my Roth IRA right now. Now, if you're interested in the equivalent index fund at Vanguard, you're going to want to look at VTSAX, and that ticker should be on the screen for you right now. So in a sound three-fund portfolio, it's a good idea to have some exposure to the international markets. You just never know when the US market might be down, and there could be an opportunity where an international market ETF or index fund is doing very well. That said, Vanguard's ETF that will give you exposure to international stocks is Vxus. Vxus is currently trading around $50 a share and has a 10-year performance of 4.8%. This fund has over 7,800 stocks that it invests in. So between this ETF and VTI, you're getting exposure to over 11,000 different stocks around the world. The expense ratio for Vxus is 0.07%. So for $1,000 invested in this ETF, you're only going to get charged a 70-cent fee. Now, even though the 10-year performance for this international market fund is lower than VTI, that's not to say that will continue the next 10, 20, 30 years. You just never know what's going to happen. What we do know is that this ETF does bring a little bit of diversification globally into an investment portfolio for anyone looking for exposure to the international markets in their three-fund portfolio. Now, if you're interested in the equivalent index fund of Vxus, you're going to want VTIAX. That's the total international stock index fund that Vanguard offers. Now, the three-fund strategy teaches that the final part of this portfolio will be invested in a total bond market ETF. For this, we're going to look at Vanguard's BND. But remember, I said that depending on your situation, you may want to replace this bond ETF with something else, and I'm going to get into that in just a little bit. Now, Vanguard's BND is a great ETF that does have its own level of volatility, but sound education teaches us that having a fixed income asset like this bond market ETF can smooth out the ups and downs your investment portfolio would experience from the other two parts of this three-fund portfolio. BND is currently trading around $73 a share. Again, depending on when you see this, it may be up and may be down, and has a 10-year performance of 1.3%. The expense ratio for this ETF is 0.03%. So just like VTI, you're going to get charged 30 cents for every $1,000 invested in this ETF. As you can see, returns for this type of ETF generally isn't as high as other ETFs that invest in stocks, but that's okay because a fund like this is something I'd want to have in my retirement years, or if I were someone who didn't like that high level of volatility that comes with stock ETFs. This ETF does have over 10,000 different bonds that it invests in. So between this and the previous two ETFs, you're getting exposure to over 21,000 different stocks and bonds. If you're interested in the equivalent index fund for this bond ETF, you're going to want to look at VBTLX. Now, having a bond ETF in your three-fund portfolio is nice to keep during your retirement years, but if you're someone who's in their wealth accumulation years, then the general education is to not have any fixed income or very little fixed income in your portfolio. So the next question is, what do you replace BND with? Well, that's the next question that I'm going to answer right now. So someone like me who isn't interested in having a bond ETF at this moment, I would look at a small cap value ETF. The ticker for this is VBR and the equivalent index fund is VSIAX. VBR is currently trading around $160 per share and actually holds about 892 stocks. And what you should know is that this small cap ETF targets small capitalization value stocks. That means the smaller US companies that have more upside than, say, your typical S&P 500 company. So you're not going to get exposure to the S&P 500. You're going to get exposure to the smaller companies, which are still big companies, but just smaller than your S&P 500. So yes, there is more risk, but that just means that the ups and downs are going to be a little bit more fun. The 10-year average annual rate of return for VBR is 10.93%. And since inception, it's been 8.59%. So there has been a little bit better of a return for this ETF when you compare it to VTI, Vanguard's US Total Market ETF, or the S&P 500 ETF, VOO. And that's why I personally would replace the bond market ETF portion of my 3-fund strategy with this ETF. So you know which ETFs to invest in for your 3-fund strategy. The next question is, what should my allocation percentages be? And really, this is going to come down to each investor. If you're someone who's okay with being exposed to equities, meaning stocks like I am, personally, I would do like a 60% in VTI, 20% in Vxus, and then 20% in VBR. So yes, I would have exposure to all equities and I would maintain that throughout my years as I'm building wealth. When I get closer to retirement, maybe I may trade out my small cap value ETF for the bond market ETF, but I would continue to maintain that same ratio of 60-20-20. If you're someone who isn't comfortable with the ups and downs that my portfolio might bring, then maybe you want to do an even split. 1/3 to the total US market, 1/3 to the total international market, and 1/3 to a total bond market ETF. You're just going to have to play with the numbers a little bit until you find what works for you, and then you'll officially have your own 3-fund strategy that's going to work for you to help you build wealth. And another investing topic that a lot of people overlook is what type of investment accounts they need to open to be able to even invest in these ETFs and index funds. Check out the video on the screen right now, and I'll see you over there. If you're not interested in that, check out the video that YouTube says you should watch, and I'll see you over there. Take care. Peace.